Today, Turkey's central bank raised its overnight lending rate by 75 basis points. It decided to keep its policy and overnight borrowing rates on hold. I'm joined by Sevin Ekinci, founder of Ekinci Economics Consulting. So Sevin, were you expecting this?
Actually, my expectations and the market expectations are slightly different. I was expecting around 50 basis point increase in the lower bound of the interest rate corridor and in the upper bound of the interest rate corridor. This was mainly because the central bank would care more about the lower bound because they already said that the lower bound affects more the capital movements and the upper bound affects more the commercial loans, while the policy rate is affecting more the growth rate. This was the reason, and recently, the Turkish lira weakened against dollar and euro because of the global uncertainty and Fed policies. However, just a few days before the central bank monetary policy meeting, Bernanke made softening statements, more dovish, and this has eased the market moves. And Turkish lira already strengthened to 191, 192 against dollar during the last week. So that's why I have decreased my expectations for rate hike to 50 basis points. The market on the other side, I saw today there were either some economists who were expecting 150 basis points on rates, a rate hike on rates from the central bank. That's why the market reaction to this 75 basis points were not very high today.
And what was trading like before the decision, and what sort of market reaction are we seeing in terms of the lira and government bonds?
The Turkish lira I could say that Turkish lira did not even strengthen. It has weakened to above 191, and the interest rate on the benchmark bond declined around 0.1% to 8.75. So these are not good market reactions. If you were seeing some strengthening move on the Turkish lira, and it will be better. But developments on the international side and from the global central banks will be more important for the market reactions right now. And I understand the Central Bank of Turkey is also watching the developments and the statements from the developed market central banks.
And finally, what other actions are you expecting to see from the central bank over the next few months?
It is related with the inflation figures. Now they have some short-term concerns about inflation. The recent figures, year-on-year figures on inflation is 8.3, which is extremely above the end-year expectation, which is 5.3% year-on-year. And in July, there will be we can see some slight increase again in inflation because of the foreign exchange depreciation and the uncertainty on the international markets, as well as this is Ramadan in Turkey and people consume. There are more consumption on the goods. So we can see some increase on CPI rates, year-on-year figures. After August, there will be a favorable base effect, so there will be some declines towards 6%. The inflation figures will be very important for the central bank decision. I think we might see a further rate hike if there will be some concerns about hitting the end-year inflation expectation. This 5.3% can as well be revised for the end of the year. The medium-term inflation target is 5%, and this seems unreachable at the moment. We will watch them.
Great, thank you very much for that. Well, I also looked at oil today for today's Commodities Corner, so make sure you do check that out. But for now, goodbye.